On June 12th, SpaceX is hitting the market at a valuation of $1.75 trillion. It's the largest public offering in stock market history. But if you're looking to buy in, you need to understand exactly what you are getting. You are actually buying three distinct businesses rolled into a single ticker. First, there is Starlink. With over 10 million subscribers globally, this satellite internet division is pulling in over $11 billion in revenue and growing 50% year over year. It is the profit engine. Second is the launch business. Their Falcon 9 rockets and Dragon capsules dominate the industry, generating roughly $4 billion a year with a 99% mission success rate. Then there is the third piece. In early 2026, Elon Musk's artificial intelligence company, xAI, was merged into SpaceX. It is a massive bet on orbital data centers, and it is currently losing $6 billion a year. Look at this breakdown. You have Starlink generating $11.4 billion in revenue, and launches bringing in $4.1 billion. But those profits are actively covering xAI's $6 billion operating loss. So when you buy SpaceX shares, you are essentially buying a highly profitable internet monopoly to subsidize a massive, speculative artificial intelligence gamble. There is intense demand to get in on this offering, but your ability to actually buy shares depends entirely on where you live. If you're a resident Indian right now, you cannot buy SpaceX shares at the initial $135 IPO price. India is completely excluded from the direct retail allocation list. Your standard demat accounts like Zerodha or Grow cannot access this initial U.S. market transaction. The 5 brokerages handling the retail distribution, including Robinhood, Fidelity, and Charles Schwab, require you to have a valid U.S. residency to participate in the IPO allotment. So the front door is closed to resident Indians. But there are still ways to get exposure to this asset, and the right path for you comes down to your specific passport and zip code. You will have to make a choice. You can either secure market access, or you can secure price certainty, but depending on your legal status, you likely cannot have both. Let's map out your options. The clearest path belongs to non-resident Indians living in the United States. If you have a U.S. brokerage account with platforms like Robinhood or SoFi, you can log in right now and submit a conditional offer to purchase shares before the final deadline. Keep your expectations in check, though. High-demand IPOs almost always result in an allocation lottery. You will likely only receive a small fraction of the shares you request. If you live in India, your primary immediate option is the resident Indian route. This relies on the liberalized remittance scheme, an RBI framework that allows you to legally send up to $250,000 abroad each year. You use that allowance to fund an international brokerage account, like Vested Finance or Interactive Brokers India, and buy the stock on the open market once trading begins on Thursday. The financial trade-off here is steep. Because you are buying on the open market after the listing, you forfeit the $135 IPO price. You will be paying whatever premium the market demands on day one. You also take on a heavy compliance burden. Sending the money requires filing Form A-2 with your bank, and every year going forward, you must disclose these foreign assets in Schedule FA of your income tax return. This remittance route gets you day one access to the stock, but you pay for it with unpredictable entry prices and permanent tax paperwork. For conservative investors, there is a third option, the domestic feeder fund route. Once SpaceX goes public, local asset management companies will launch new, regulated mutual funds that track the company's performance. This removes all the friction. You invest in rupees from your standard domestic account, entirely bypassing the remittance limits and complicated tax disclosures. You pay for that convenience by missing the initial listing entirely, and you will owe ongoing management fees to the local fund house. Getting access to the shares is only the mechanical side of the equation. You must still decide if the business is worth buying. The financial filings show a clear vulnerability. Starlink's internet profits are immediately draining out to cover the $6 billion in operating losses generated by the artificial intelligence division. This chart illustrates the valuation gap. Against Starlink's $11.4 billion in revenue, the $1.75 trillion market cap means you are paying a multiple of 107 times revenue. The company is priced for flawless execution. Finally, you face severe governance risks. Elon Musk holds Class B shares, which grant him 10 votes per share compared to the single vote attached to the Class A shares you can buy. You will have absolutely zero voting power to stop leadership from shifting your capital between internal projects, like taking internet profits to fund AI servers. Access is just the first hurdle. To hold this stock, you must be entirely comfortable with an extreme valuation multiple and complete surrender of shareholder control. Here is your execution matrix. US-based NRIs. Submit your conditional offer on Robinhood or Fidelity today, but expect a partial fill. Resident Indians wanting day one access, execute an LRS open market order only if your international account is fully funded and verified. Don't rush a new wire transfer. Form A2 compliance errors cost more time and money than missed early gains. For conservative resident Indians, avoid cross-border friction completely. Wait for domestic feeder funds to launch in the coming weeks and buy in rupees. Regardless of which path you take, remember this is a highly speculative asset. Even at a $1.75 trillion scale, this single stock should never exceed a small single-digit percentage of your overall international portfolio.